Trading. I'm sure you must have heard this word before. Stock market, forex, and all these things. And these days, it is such a hype that everybody wants to be a trader because it seems so easy. You just have to open your laptop, see some charts, press some buttons, and make money, right? But in reality, it is not. Ladies and gentlemen, my name is Harshit Patel. I'm a trader, an investor. I have been actively trading in the market from past 6-7 years. I've also been creating content around the same zone. I started back in 2023 and I tried to give the knowledge in terms of short videos on Instagram. And in just 12 to 14 months, it went from 100 followers to 1 million followers. And currently it's at 1.4 million. Though when I started, few of my friends said, Instagram, Reels and all these things are there for fun videos. I thought they might be right because nobody wants to see a teacher when it comes to short content. I tried and it went like anything. Apart from this, I have also been teaching since 2 years and have students across 12, 13 countries. And my teaching experience have given me the insights so that I can tell you that how you can actually start and get some knowledge and become a pro in this thing. So during this whole scene, I am going to tell you first the beginner perspective, like how you can start and what should be the roadmap, and then how a professional thinks and specifically how I think when I am into the floor. So when we are actually starting trading, it's basically 4 phases that you have to go through in order to make it. Phase 1 is like you don't know anything about market, but you are very fascinated because you have seen other people making money from it. So you want to start, but you don't know anything. So in that phase, you have to gain knowledge about basics of the markets, how it works, order placements, what is futures, what is options, what is stock market, how does it work, what is forex, what is cryptocurrency, all this basic stuff. It goes into the phase 1. Then there is phase 2, which is very famous. It's called the technical analysis. I'm sure you must have heard this word before. Anyone? Great. So technical analysis. We feel if we will learn technical analysis, we will become a trader. But in reality, technical analysis is just the phase 2 of trading. Now, what do you have to learn? In technicals, there are 2 things, basic and advanced. Basic, you can learn about basic support resistance, candlesticks, price action, and all these things are there. Now, some people think that these basic things actually does not work in real market. But I have a total different mindset behind this. And you are going to understand this by the end. That's my promise. So after this phase 2, then there is phase 3, where we lack. And you must have heard this one thing already, that out of 100% traders, 95% people lose money because they focus so much on the strategy, technical analysis, on this basic part. Third phase is risk management, money management, risk to reward, and position sizing. Now you will get many videos around these topics, and this is the phase 3, and it is more important than technical analysis. That is what I feel personally. Then, when you understand this third phase of trading, then there goes the fourth one, managing your thoughts and controlling your mind. Now, what kind of thoughts? Greed, fear, and FOMO. ये जितना आसान लग रहा है सुनने में, ग्रीड, फाइन, एक बार गलती हो जाएगी, आई विल नॉट रिपीट. फियर, फाइन, ठीक है, नहीं डरेंगे अगली बार से. फोमो, फियर ऑफ मिसिंग आउट, फाइन, नेक्स्ट टाइम से आई विल नॉट रिपीट द मिस्टेक्स. बट इट्स वेरी डिफिकल्ट बिकॉज ये हमारे ह्यूमन नेचर में है. करेक्ट? वी डू any work, there is some kind of greed attached. And when it comes to trading, it's totally opposite from our basic human psychology. Right? Now, once you understand all these 4 phases, and trust me, I can tell you by my experience because I have been in the contact of hedge fund managers as well. Some of the traders, national, international, who day trade with 200 crore capital also. These are the 4 things. After this, what separates you from being a normal trader to going up to a professional one? 3 things I found and which I follow a lot. Number 1, now these are the game changers. And now, after understanding these, you will understand why I was saying that technicals are important. There are lots of things when it comes to technical analysis, different aspects like, if you understand the basic things, candlesticks, support resistance, trend lines, this thing will not work. And then you have to understand this more important thing like smart money concept and all these things are there. They are good. I'm not saying they're not bad, but they're good. But the main thing lies on these last 3 things. Number 1, having a probability mindset. Now, what is that? I'll tell you in a simple words. Let's say if I flip a coin, what are the chances that I'll get head and what are the chances I'll get tails? Anyone? 50-50? Fine. Let's say if I flip it 10 times, there can be chance that I might get 6 times heads and 4 times tails. Correct? Correct? There can be times where I can get sometimes 7 times heads and 3 times tails and vice versa. Correct? But if I do it 10,000 times, now we have expanded our vision. The outcome again goes into 50-50. So there are 2 things to notice on this thing, the probability mindset. One is when a person knows that this is how it is going to work in the end, the probability mindset helps person like us and others to not to attach to a single trade, because we as a humans are very driven with emotion, specifically where money kicks in. Nobody, tell me, acha, who wants to lose money out of you all? Who wants to lose money? No hands are up. That's the thing. Nobody wants to lose money. But when it comes to trading, you have to be immune to that. So this probability mindset helps us to understand that, okay, no matter how hard I try, how good my analysis goes, things can turn around at any moment. And even in the bigger scale also. Now, the second point, risk management aspect. It's kind of that. Now, how it goes is, let's say if I have taken a 5% risk, okay? And then I decided to take a 1% risk on the other account. So how we'll see is, let's call it A account, a 5% account, and then we call it B account, a 1% account. So let's say if we have 100% capital and if we are going aggressive, because everybody wants to make big money, and we know that if we want to make big money, we have to put big money. That's a simple thing. So we want to risk high. Now, when it comes to trading specifically, not talking about investing, Abhi, trading, if you are risking more, how it's going to affect you, I'll tell you. Let's say we have 5% risk on one account and 1% risk on the other account. 5% risk will give you 10 to 12 attempts only if you are going to get stop losses in each and every single trade. Am I right? Technically it's 20, but in trading it will give you only 10 to 12 opportunities. Basically, you can place only 10 to 12 trades because with each loss, your capital is reducing. So you'll not be able to trade with the same flow again and again. So you only have 10 to 12 attempts, that's it. Now, if you're taking 1% risk, can anyone tell how much opportunities we have? Like how many trades we can put on the 1% count? Huh? We can put at least 60 to 70, right? Because the risk is only 1%. Now, tell me, account A stands a higher chance to survive and make money in the longer run, or account B stands a higher chance? Which one? Exactly, B1. And this is the most important thing when it comes to trading. So, in general, as basic calculations, it may look that if you are going to risk high, you will be making more. But in longer run, if you risk high, chances are very high you'll end up losing money. But if you risk less, chances are high you will survive for the longer run. And if you survive, money will be made. Now, the third and most important point. When it comes to trading, no matter how many times I get right in the market, no matter how many times I get wrong in the market. By the way, we as humans, we want every time we should get right, correct? Tell me how many times you have made an investment and you are putting money somewhere and you want that, okay, this investment should flip and it should give loss. Do you want that? No. But the outcome can be again 50-50. So, in trading specifically, no matter how many times we win, no matter how many times we lose, it's all about how much you are making when you win or the trade is in your favor, and how much you are losing when the trade is not in your favor. Now, with all the connection I have, even some of the best hedge fund managers, they have lots of tools and lots of equipments, sources to get the news from. But they also sometimes put a 40% accuracy. Even if you'll find the best traders, if you do the research, you will find that the best traders goes into the 50 to 60% ratio. And I'm telling you, even with 40% accuracy, it is possible to make money. Now you will think, how is this possible? If I'm taking 10 trades, out of those 10 trades, 6 trades are not in my favor and 4 trades are in my favor, how can I make money? It's wrong, correct? Any questions like that? I'll tell you how. In trading, there's one thing which is called risk to reward. Now how it goes is, let's say if I've taken a risk of 1000 rupees, that 1000 rupees risk has the potential to give us 2000 also, 3000 also, 4000 also, and it can also go up to 10,000 also. The rewards are not limited, and that's how you can be wrong in the market and make money, and sometimes you can be right in the market and still lose money. And this is the most problematic thing. When you will start trading, you will feel like the chart is going in your favor. Why are you not making money? All right. Now, the second part, the investing part. Many people say that you shouldn't be trading. You should be only doing investing. You must have heard it before, right? But in reality, we don't have a comparison of these two. That is what I feel. Trading is a skill. It's a skill. And investing is a must-have thing. There is no comparison. You cannot choose in between that whether what should I do? Should I choose investing or should I choose trading? Or I can do both. Trading is a skill if you understand and if you feel that you have enough time to give to the market, you can choose. But investing is one thing which every one of you has to do it. I'm telling you, make it as an addiction. If you actually want to create wealth, make investing as an addiction. Start doing SIPs and all these things. Now I'll tell you one thing. There is one line written in Intelligent Investor. No matter how hard you try, No matter how hard you try to catch the bottom of the market, regular investing will always beat whoever is trying to catch the bottom of the market. And I personally have experienced that. You must have heard about monthly SIP. I am doing daily SIP. Daily market opens, money goes into this SIP, and every day, same process. And it's going to continue at least 25 years. Another thing, how I basically, when I'm investing to any company, what I go into the valuation thing. Like when you search about investing, there are lots of things to understand. PEG ratio, P ratio, ROC, ROE, these difficult terms are there. But one of the things that has been working very well for me, it is the PB ratio, which is called price to book valuation. I really like to acquire or invest any company which is under valuation. So if you're investing, always look for the valuation. Now, the last thing about day trading, if anybody, now I'm connecting to the starting point, if anybody wants to be a day trader and he thinks that he can just learn technical analysis, open the chart and click on some buttons, I can make money, 1 or 2 or probably 1 week or a month you can make money. But day trading specifically requires you to build a muscle memory, and muscle memory takes time. When it comes to day trading, it will at least require 5 to 6 years as per my experience. There are people who have done in just 1 or 2 years, but what I feel, it requires at least 5 or 6 years if you actually want to be a successful day trader. So with that said, all the best to everyone. Thank you so much.